God, this week is finally coming to an end. Of course, it's been marred with a lot of pain, a lot of earnings reactions, steep one at that. But yesterday we managed to make a smidge of a recovery. Yes, there's support coming in from IT, from some of the beaten down auto names of late. And of course, HDFC Bank as well is duly pushing up the index post its numbers. But yesterday we just dragged around in just a very, very narrow band. And I think more than a significant upside, now one is only praying for the selling to stall at least.
Yep, selling to stall. But Aisha, again, it's back to Trump at Davos. Everyone's in a sense now examining with a microscope every sentence, every indication, which in a sense, for the first time, is addressed a very large public forum, the US president. And what in a sense is the important messaging from there? And the messaging is very simple, that tariffs will go higher, but it is not going to be as high as what the world was expecting. Local US manufacturing would be encouraged, and oil and the commitment towards increasing oil production, I think, is going to be there. So I shall just think through it, right? I mean, you look at the first 4 days of the Trump regime, there is nothing negative for India. And, while we all are assuming that, okay, there is going to be a reset in the world, the first 4 days, which is about good 72 hours, is a good enough time frame to judge what the, thought process of the US president is. He's not done anything outrightly, outrageous in terms of imposing Trump tariffs. Whatever has been indicated on the war, it is about calming the geopolitical tensions down, which is always good, not escalating. Yeah. Third, oil. Oil has come down. It's not gone up. So the three factors which in a sense are favoring India, the factors which in a sense were a concern for India, I think currently are favoring India. And then also on the dollar index, it is at 108. Yeah. When Donald Trump got elected, it was at 107, 106. So it's not that the dollar index has also gone up. So the reality is that 72 hours or the first 4 days of the Trump regime, there's nothing negative which has come for Indian markets so far, and that is something I'm surprised markets are not recognizing or they are not acknowledging, because they say that the first 100 days, well, for Trump it's not going to be first 100 days, first 10 days you'll figure out what he would do, right? So first 10 days out of that 4 days have not been anything which could be called as detrimental. Whatever has come out, it's not bad. Then you have US market, which is at an all-time high. Not that it will influence us. I think US market is like a marriage in your backyard. You feel happy about it.
But you're not participating.
But you're not participating about it. So you say, okay, I'm happy with the music. Maybe I'll be invited for a free meal. So that's US market for me. But it does not change my life. Yeah. So that marriage in the backyard is S&P all-time high. Trump not doing anything is the global setup. It's as simple as that.
Yeah, absolutely. But like you're saying that, Trump 2.0, the expectation versus reality is actually completely stark, because the expectation was that he's going to come in and he's going to levy the 25% tariff on goods from Mexico and Canada, additional 10% tariff on China. Trump-Putin talks will likely soon take place on Ukraine and Russia as well. He pledged to end, birthright citizenship, which of course, the Supreme Court completely shut down last night. But the reality is very different. What you've heard is a very, very mellow Trump. He's only done away with Biden's 50% EV target for 2030, which he revoked when he came in. He put forth a mandate to lift curbs on Alaska's oil and gas, and offshore wind energy leases were also halted. So, the narrative has actually been different, and the actuality versus the expectations have been very, very starkly different. But quick check on how global markets actually panned out overnight. And like Nikun said, the fireworks were on, at least for the US equity markets. Major averages managed to close in for a second, positive week, or at least are headed in for a second positive week in a row. About a 0.5% uptick for S&P 500 index. Look at the Dow, over a 400-point move is what it closed the day with, and the Nasdaq as well, a smidge higher, relatively tempered as opposed to S&P as well as Dow, but in the green nonetheless. Asia this morning, it's a sea of green also. Shanghai is holding up, powering through the move that it had yesterday. About 1.5% up in the green for Hong Kong. Very strong move. There's Japan, which is also holding out, and the periphery markets as well are also looking good. Of course, Trump is now pushing for rate cuts, and that's something that the street is waiting and watching with bated breath for. But for our markets, like we said, just very sideways. Even HDFC Bank cooled off from the top of the day. Ultratech Cement, strong earnings reaction, lifted up with it. The rest of the cement pack as well, and technology, that's sectorally been that one secular trend. Even mid caps which have performed well, like a Coforge, Persistent System, all those stocks held out very, very smartly, and that's pretty much the sectoral picture. But again, other than IT, nothing very meaningful.
See, Aisha, let's first look at Nifty. What is the setting on the table for the Nifty, and then the mid and the small cap stocks? Look, there is excruciating pain in the small and the mid cap stocks, because when you see a 30-40% fall in a matter of 6 or 8 weeks, it's not a great feeling in any market for anyone. But Nifty in last 10 days has frankly managed to stay just around 23,000. It's just been a flat range. The intraday graph, if you look at the 1 week graph of last 10, the intraday graph you combine and look at the 10-day chart, you actually would see that the Nifty seems to be making a base. Like they say in Hindi, the neef ban rahi hai, foundation is getting laid. You are finding support at lower level. Despite the fact that the global narrative is not the best, despite the fact that the local participation is low, and despite the fact that FIs, they continue to really be a relentless seller in this market. So the Nifty clearly seems to be making a base. Is this an indication of a pre-budget rally? Are we in for really short term? I'm saying 3-4 days, 5 days, till 2nd of Feb, till 1st of Feb. Well, if the strength continues, I will not be surprised that the positional buyers will come back. They would say, okay, let's chance arm. There is no harm in saying that a lot of bad news is behind us, a lot of numbers have come out. We know that earnings are not going to be great, market reaction would be sharp, but the expectations are so dim and so limited that is there case for a pre-budget rally. So for me, the number one trend is Nifty is making a base. Number two trend is that is there case for a pre-budget rally? I would say the odds are 60%. Nothing is 100%, but odds are certainly higher than 50% that for next couple of days, the Nifty or individual stocks connected to the budget may give you a 3 to 5% or 5 to 10% swing. Because, Aisha, it's all about the positioning in the market. There is just so much of fear. Everything is looking oversold. Every market view is dim right now. Nobody is participating. And that's the time typically when in the near term, the market trading bottoms are made. Look at the reality. I mean, the minute I said Trump, you say, okay, you get a jitter in your spine. You said, okay, something's going to change, but nothing has changed. Yeah. You say market is so bad, but 10 days you were just in a 600-point range. Reality is very different. Mid and small cap stocks are different kettle of fish, but the reality in terms of global and the Nifty is very different.
Yeah, different picture actually emerging, but it's all about earnings, and that's where you've seen the starkest of reactions come in, right? So very strong numbers from United Spirits. That's going to be an important one to track when it opens from a Nippon AMC as well. Of course, there's a Tejas Network, a Thyrocare, HPCL as well, which has been a strong set. In line for Sona BLW, KFintech, for Adani Green, for Emphasis. And weak numbers then for Dr. Reddy's. And I think this is one of the first pharma majors to come out with its numbers.
Yeah, Dr. Reddy numbers don't inspire too much of confidence. And especially, that entire commentary which is centered around Revlimid, those numbers don't inspire too much of confidence. I mean, the whole, everyone thought that this would be we knew that the effect of Dr. Reddy in a sense would be waning away. But there is nothing else minus Revlimid which really seems to be looking exciting, especially in the domestic business or their global business. The stock's been in performer. It is going to be, and brokerages have come out with a series of downgrades for Dr. Reddy. So it's not something which will inspire a lot of confidence here, both on the revenue side and also on the EPS side and also on this wonder drug Revlimid side. Things have started fading away. The one which I really like, I think, is Thyrocare. And the reason why I like Thyrocare is pure uptick which seems to be coming in the operational numbers. I was just looking at the numbers in the morning. There seems to be a big uptick which has come in their top line, which clearly means, and Thyrocare, the first port of call for anybody who's buying or looking at diagnostic sectors is that you would look at the top of the pyramid business, which is Metropolis, followed by Dr. Lal. Then you come at Thyrocare, because Thyrocare in a sense is a low margin but a high volume business. For me, what matters is the revenue growth, which is revenues come back, pricing power has stabilized, and volume now seems to be coming back into the fold. Otherwise, revenue would have not come back. So EBITDA and revenue are more important than absolute margin numbers for me. But the fact that revenue has come back, it clearly means that they are getting their act together. Pricing decay seems to be stabilizing, and this is the volume business. Tharvcare is like the lower end in terms of getting margins. So if volume uptick has happened in a business like Tharvcare, for me it is a clear indication that the worst is behind, business is stable, and now you could predict stability and perhaps some stability in the Tharvcare, in the entire diagnostic business going forward. That's how I look at it, Aisha.
Okay, that's the take coming in on